is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Tuesday, everybody. Zinger Nation, welcome back. It is Tuesday. Welcome back to another Benzinga Kaiju educational series. Today we will be talking about Biden's executive order when it comes to AI. This has probably been the biggest piece of legislation, regulation, anything passed when it comes to AI so far. So I'm excited today. We're going to be talking to Ryan Pannell, of course, from Kaiju. And we are so lucky to be able to digest these things in real time with someone who has the expertise and knowledge and background in the space. So without further ado, let's go ahead and welcome my man Ryan Pannell on the screen. Ryan, how you doing?
Good, Aaron. It's nice to be here again. Sorry, we're not going to be talking about setting up trading platforms this week with the executive order dropping earlier. It seemed more relevant, certainly to your viewers, to kind of unpack that before we get back into the nuts and bolts of trading education in the weeks to come.
Yeah, and Ryan, I mean, like I mentioned on the top, I mean, would you say so far this is the biggest, at least, piece of legislation, anything passed when it comes to AI?
Yeah, I mean, in terms of legislation, it's important to remember it's not really legislation. It's like a publicized intent of what's going to guide the way forward with AI with AI in the United States, versus some of the actual legislation that's been passed in Europe.
Yeah, I mean, so the executive order, I mean, it's important to remember that, like you said, it's not a real piece of legislation in the sense that it's gone through Congress, been passed into law. But, I think from the administration standpoint, a lot of that stuff can take a while, right? To actually draft a bill, get it through the House of Representatives, and then get it through the Senate. It takes a long time to do that. As we've seen, Ryan, AI has been developing pretty rapidly in the sense that, we had ChatGPT kind of come out probably around this time last year. Maybe not come out, but I guess like take the public by storm, and people really started to pay attention to that. And then in the last year, we've seen that develop now into a countless, tools when it comes to creating images, videos, you name it. So I think the administration saw this AI stuff happening pretty quickly and said, okay, we can't wait 2 years for a bill to get passed through Congress. We got to put something out there now.
Yeah, well, I mean, while it's not specific legislation, it's not an act that's passed, it certainly does have the capacity to direct regulatory bodies, right? Like an executive order is enough to expand the regulatory powers of, let's say, the SEC. So encouraging plans to be formed by those regulatory bodies for regulation of AI, for test parameters, et cetera. Like those are the wheels that were put in motion by this executive order, which is different from some of the AI legislation that's already come out here in Europe, which is where I'm based. And that you have specific protocols with teeth and new agencies that were created, et cetera. Again, not to say that this doesn't have teeth, it won't have an impact. Certainly, it's broadcasting the intention of this administration. And unpacking the executive order is always a product of reading the top level and then the inferences that it contains, because they are very, very broad generally. And this is no exception, but it certainly telegraphs, what's going to be walking up the driveway in the next 6 months.
Yeah, and I'll pull up here on the screen, Ryan, the fact sheet that the White House put out with the executive order, and they outline a bunch of different sectors and whatnot within AI. Let's talk about finance specifically. I mean, how does this executive order impact the finance sector when it comes to AI?
Well, specifically, there were a number of different areas that were marked out at the very beginning here with this EO. For example, trying to regulate AI in terms of making sure that it wasn't discriminatory in credit and lending decisions, which is something that like has already occurred, right? Like AI, one of its use cases alongside fraud in commercial banking is in determining credit worthiness of individuals. And there's been some exposés that determine that the AI in some circumstances is heavily biased. And so how do you work that bias out, and how do you regulate that so that it is a free and even market for everybody to enjoy? Um, Sort of at the deeper level, if you're talking about thematic regulation, so you're an investor and you think that AI has a bright future, and instead of investing directly in the technology, you're thematically investing in the companies that are leading the way in AI. There's broad regulation proposed across how those companies develop AI, within what framework, the speed and efficiency with which they're able to operate. I mean, the downside of regulation is that it generally slows things down, right? I mean, that's not to say it's always bad, but control adds time to all innovation and all development. So, the ability of an open AI to expand and grow as fast as it has, that will start to compress NVIDIA's ability to innovate new technologies to support greater computational needs, start to compress. Even applications may be redirected, or some instances may dry up completely. Certainly, and that's again on the thematic level. On the capital market side, the I don't want to say creepy, but that's the only thing that comes to mind really. The creepy thing is the brief and vague reference to the encouragement of increased regulation in the regulatory bodies. Now, I mean, this is like a slippery slope, right? I mean, there's good regulation in capital markets. I mean, we should all embrace that. The fact that you don't get your fat fingered trades executed outside the MBBO is thanks to regulation, right? The fact that institutional monster players in the markets can't just steamroll your order flow is thanks to regulation. The fair and efficient markets that we all enjoy is thanks to regulation. However, when you have a new technology that's being proposed as something that needs to be regulated, first question that we ask as leaders in the field is by whom? Who is regulating this? Who is determining whether or not the models are sufficiently tested, whether risk controls are sufficiently in place? I would hope that this will be sort of some of the more seminal AI experts in the world today. My experience tells me that is unlikely to be the case. So that part is a little disquieting.
Yeah, and I mean, in a sense, especially when it comes to AI, I mean that it's just kind of logical, right? That right now, say you're someone like yourself, Ryan, that's an AI leading expert, thought leader, knows you know a lot about AI. You're probably more likely to be working at a business or in the private world and going to be, advancing that technology in some way that way, rather than go work for the government as a regulator, right? Like in a lot of other places, if you're talking about government regulators of the capital markets in the SEC or in other places, they're people that worked in finance for years and years and years, and then a lot of them transitioned to a regulatory role, or some of them have been doing that regulatory role for a long time. When it comes to AI, you don't really have the benefit of having, a huge bucket of experts to pick from for because it's so new that the leading experts are the same ones that are running the companies right now. I mean, would you say that's kind of a fair like assessment of what's going on in the AI space?
Yeah, I mean, everybody's grappling with the use case of their particular AI, no question, right? Even, user behavior on GPT has dropped by an enormous percent since the first realization of what it was potentially capable of doing, because using it effectively for the average person is quite cumbersome, right? Its ability to generate usable content for you is highly dependent on your ability to create appropriate prompts, which generate the content. And if you suck at prompt generation, prompt creation, then it's going to give you substandard output. I mean, there were a lot. There's a number of articles on how many journalist jobs were lost sort of immediately and then hired back within 3 months, because while the promise of GPT was like, oh, what do I need you for? I can have this thing collect a number of facts and write articles. The articles weren't particularly inspiring, and that uniquely human factor, which encourages people to read the article, and in reading the article expose yourself to the ads, et cetera, et cetera. Most people innately know when they're reading, at least I innately know when I'm reading a GPT created article. Like
100%.
There's a lot of soul missing. There's a lot of humor missing. I overuse this word with AI, but there's a lot of nuance missing. And so you just sort of tune out. If it's a historical essay or a series of facts, fine, great. It's going to be pretty gray anyway. But if you're looking for enjoyable content, it's not very good at creating that so far. And so, same thing in what we do on the generative side, and culling information, filtering investment ideas down. There's some transactional value there. Of course, we use it to make endpoint decisions. We use predictive AI. We don't use generative AI at all, actually. So, that's where we're all sitting here. And then you're reading back the EO, trying to determine where, based on your knowledge base, that regulation is likely to come. Like, having been a quant shop for a long time and an AI shop for a long time by anyone's normal standards, we've seen where the regulations come in. And so while I was really encouraged to read the encouragement of greater transparency around the AI models that we create, because we've been advocates for that, because we want to share the outputs, right? People will say, oh, your strategies do this. Can we view the outputs? Can we view the KPIs? And currently, regulators actually prevent us from sharing them. Like, we can't share, even though we have it meticulously created and tested over 6 million variable iterations. We have the 15-year scientifically validated model for the DIP ETF. We can't share it because it falls right now under the umbrella of a quantitative backtest, which it's not. But maybe these new regulations will finally separate those things. And there'll be an opportunity for us to work with regulators, explain why these mathematical models are not the same as a quantitative backtest. And maybe they let us, under certain conditions, finally share with the investor community the KPIs that underpinned all these strategies. Like, everybody wins in that outcome. It's just been hard to convince regulators that that's the case, because they think only we win. Well, they look awesome, so of course you want to share them, and they're no guarantee of future profitability, so no is the answer. And you can demonstrate that for, I don't know, coming up on a year, DIP has executed on model every single day, which is not possible with a quantitative backtest. But there's nobody on the other end of the dialogue that understands what the hell you're saying, frankly. And they just tune out. So maybe those people will now exist as those regulatory bodies. So that was a little bit of silver lining there, I think.
Yeah, and I mean, I think you see that in different emerging industries where the regulators themselves may not understand some of the different intricacies going on in that new industry. I mean, you had that with Sam Bankman-Fried and FTX. Like, they would have regulators come in and he would just start talking about all this technical crypto blockchain stuff, and their eyes would just gloss over and it'd go over their head. And then they weren't really able to be effective regulators in that sense, obviously, because they didn't know what he was talking about. But he sounded smart, so they were like, "Oh yeah, he's a smart guy. He knows what he's talking about." Ryan, you mentioned in the executive order itself, there's mention of more regulation to come and maybe some kind of vague wording there. Was there any other vague language in the executive order that was used that, I guess, what is the possible impact of that regulation on investors, the way that, from what you can tell in the executive order?
Well, aside from the thematic possible impact, which we talked about a little earlier, just a few minutes ago, where, some of the optimism around the speed and efficiency that these new technologies might be created could be a little blunted now. There might be some air brakes applied to the development of some of these technologies by these bigger companies, et cetera, and increased costs. complying with regulation increases costs. That's just how it goes. But aside from that, the impact on investors could be when you get to a point where those tools are going to trickle down to be utilized by the broader investing public. Now, some of that I welcome. I live in constant fear of the return of the robo advisor, but the AI curated and directed robo advisor, which is never going to be effective like that. It's coming. It'll be out in the next 12 months. There's already a couple that are out there. And I fear for the broad investor public because, you have to take a step back and realize if you were a developer that had that system and it was capable of the type of returns that are being claimed by the developers of these systems, you would never get access to it. It is vastly more profitable to take that strategy. And if you could prove its efficacy across all the asset classes that it was advising, you take that and you wander up to the Norwegian sovereign wealth fund with its $1.49 trillion. And you say, hey, I have this new piece of technology. I'll sell it to you for $500 million, which is probably washing around between their seat cushions. They would buy that. You would never see it. It would never see the light of day. So when you see one of these systems appear, it's like, hey, use our AI-based advisor. You have to ask yourself, how good could it possibly be if you're able to use this for a commission fee, for a monthly access fee? Like, it's just not going to be viable. And I mean, you touched on SBF. How did that end? Fire, doom, fraud, lost billions of dollars. I mean, I've said it before. Those of us who've been working in applied cryptography for a long time, I could have told you that was, in the pipe. Nobody asked. And, that might seem cheeky or facetious, but, I mean, I feel for the people that guy swindled. And again, I'm hopeful that the regulation prevents that from happening with some of these predatory tools. Someone who wants to sell an AI robo investing app to a broad investment public is going to be scrutinized by the regulators, and hopefully, if it doesn't pass muster, shut down. So that's something, yes. And by extension, tools that make it through that regulation at least should be reasonably construed to be fair. And that's something that investors should be optimistic about. Actually, might take a little longer to make them now, might be a little less jazzy, might be a little more cumbersome of a process to pump it out. But at the end of the day, you should get a quality product. It's pretty exciting.
Yeah, and I mean, I guess Ryan, to that note, like, what would you say to people that are in the camp of they see any regulation as bad for business or not good? Like, I think a lot of people just kind of, if you're looking at it black and white, say, okay, regulation not good. We prefer a more laissez-faire, hands-off approach to business.
Well, I think, it boils down to a discussion of how you make your money. If you are a proponent of absolutely zero regulation, then by extension, you're making part of your profit off of the exploitation of the people the regulation would prevent you from exploiting, right? Like, is that really your business model? I can only make profit if I can dump all of my petrochemicals in this river and it kills everything in the river. Oh, you prevented me from doing that. I can't make the profit. I can't make this cool new color changing paint for your car. In our business, you can't make any money without ripping somebody in the transaction off. I think you're in the wrong business and you should go do something else with your life. Like, I have always been all for a fair and level playing field. Like, this is a zero-sum game. We know this, right? Nobody wins unless somebody loses. We're not all sharing in a magical pot of gold at the end of the day. If we at Kaiju go off and make a bunch of money on the private equity side, on the private fund management side of what we do, we took it from other people who all put their chips in to play the same game. You, your viewers here, make money somebody else lost. You took it from somebody that had the opposite outlook from you. And the more level that playing field, the more it comes down to the skill of the individual investor. And I think that's something worth supporting. If the only way you can make money is by ripping somebody off, hidden commissions and fees, poor executions outside the MBBO that benefits you, predatory broker behaviors, flow predation. I mean, really?
There are a
Like
lot of
that's
different,
what
yeah.
it is? A piranha tank? No
And that's what I
thanks.
think, like, when I hear that kinda take from people where they're like, "Oh, all regulation is bad." I'm like, you think that, like, some of these rules just came out of nowhere? Do you think, that people got burned enough and then there was, like, a reason? And I think specifically, I mean, we've kinda gone back to the crypto example a few times, and that's only because, I mean, crypto was in a way, I mean, well, it's not like AI, but similar to AI, this emerging industry that's almost moving faster than the regulation come out in itself. And you saw how some of that kind of worked out, where there's no regulate when there was no regulation in the crypto space. You had some of these rug pull projects where, one guy made a coin and a bunch of people bought it. And like you said, it's not a zero sum game. It's not like at the end of the day, all that money gets dispersed back to everyone. It's like, no, those people are out of their money because they invested in this unregulated project and product, this crypto coin, and now it's gone. And that's just the way it is because there wasn't any regulation. Now, a lot of people in the crypto space itself, business leaders, whether it be Brian Armstrong, the CEO of Coinbase, or Sam Bankman-Fried before, FTX collapsed, were actually advocating for some sort of regulation, which I saw as, you typically just don't see that from business leaders in the space. Again, similarly to AI, we've seen Sam Altman, as well as Alexander Karp. Is that the Palantir
Yeah,
CEO's
I
name?
mean, but the key thing to remember about some of this outreach is the optics, right? Like
Right.
Sam Bankman-Fried really didn't want the level of regulation that would have prevented him from, you know, engaging in global
But he
fraud. The
wanted
guy
it.
did
He
it.
wanted he wanted just enough regulation that it could bring crypto to the higher level to say, "Hey, look,
Yes,
this
yes,
isn't
and
just the
he
wild,
wanted,
wild west. This is
yeah,
regulated. This is legit. This is,
yeah, he wanted regulation that benefited him. You know, he wanted light regulation and he wanted to start the dialogue of regulation because it would take freaking years to implement and agree on anyway, because it gave him access to the politicians that he wanted to grease with the money that he stole from his investors. So, I mean, you know, like there's that in terms of Sam Altman and outreach begging for regulation. It's like you create the product, man. Like I have the capacity to restrict access to any strategy that I create. I can put layers and layers of guardrails on it. I can put so much restrictive control on our trading strategies that I can choke the life out of them completely. I don't really need somebody else to come and do that. It's like, you're an alcoholic with a house full of alcohol and you're like, please come and take the alcohol out of my house. Why don't you pour it down the drain? I mean, I have a hard time taking that type of, outreach seriously because you have the capacity to process or not process these transactions. Like, you take anything that is generative in nature, whether it be GPT or Midjourney or DALI or whatever. You're taking in original content, you're training an engine, and then based on the satisfaction of the user, you're updating the satisfaction levels internally to either, I mean, and our head AI scientists love to use the word reward or punish the system, right? That's how it gets smarter. It gets rewarded for good output and punished for bad output. And don't ask me how the punishment works because it's not really punishment. It's just an unfavorable allocation of grades, really. And so you can still do the enhancement of your internal engine by processing the inputs without creating the output that you think is harmful. Like if you are fairly certain that somebody is creating a deep fake with their inputs and their requested outputs, you can still create that internally, put it up against a black box A versus B engine system so that it could verify whether or not the input and the output could be something that a machine created, does it have a high degree of success in terms of objective and not give the output. But you return that output like intentionally, like you process this request. Somebody hops into GPT and says, I want you to write me a racist country song. You don't have to process the request. Don't sit there and beg for someone to take the alcohol out of your home. Just stop it. Use some freaking controls, man. I don't know. Like it shouldn't require at our level of capability outside entities to keep us from burning the whole thing to the ground.
100%. I agree. Well, I mean, Ryan, like we've discussed, I guess, how sometimes regulation can stifle innovation and be harmful to business, and sometimes it can increase safety and help regulate and help industries progress and take the next step. What do you think this executive order? I mean, which side of it do you think it's on?
I think in some areas it's on the right side. Certainly, anything to do with regulation around the theft of likeness, the use of uncompensated original content, and the training of models, etc., the transparency of models, and the explainability of outputs. I think that's all good. I'm concerned, as I said, about the vague language around just encouraging regulation at the regulatory body level. It was like, hey, all of you regulatory bodies that engage in this type of oversight, I encourage you to put together a plan and take a shot at what AI regulation is going to look like in your space. Yeah, there's not a lot of guidance there. That's really sort of have at it. And that I find a little concerning. If the line can be walked, I guess, appropriately, I think there's the opportunity for a very positive outcome for a lot of this. Certainly, I mean, and again, if you want to go back to what we were just talking about, crypto space, some regulation around putting up guardrails would have funneled resources into specific technologies, blockchain related technologies, around tokenized asset control that might have been more beneficial. So for this, putting up guardrails means that brilliant AI minds and the associated resources that underpin them get focused in key areas that benefit all of us, rather than it just being the current free-for-all. Like no regulation. This is why you have, this is why you have people bothering to spend time, effort, and energy creating like deep fake porn with AI. That really has no benefit to any of us. But you haven't told them they can't do it, so they're doing it. So instead, fine, you just wipe that out. That doesn't exist anymore. What that person going to do? Go do something else with their life? They're clearly a talented AI professional. Maybe they'll turn their attention to something that's more beneficial. So, some funneling regulation, I think, can help. And I hope that we see that.
100%. Well, Ryan, is there anything when it comes to the executive order that you think our audience should be privy of, should understand that we haven't gotten to yet today?
I think really it just boils down to because we're talking to an investment community here, right? Like you guys are making investment management decisions, self-directed portfolio. Some of you are maybe trading for family office or small RIA, something like that. Obviously, it's important if your investments are active in the AI space thematically to understand what impact increased regulation will have on the timelines and deliverables that you're investing in. If you're investing in a technology that promises X, and this regulation will make it 3 times harder and twice as expensive to achieve X, then you want to rethink that investment at this point in time, or at least mitigate it, spread it around, manage it in some way. Like be aware that regulation never speeds things up, ever. There's never been an example of the implementation of new regulations that made things go faster. So things will get slower, they will get more cumbersome, and here and there, you're going to have example of the blind leading the seeing, which is a little rough. My hope is that we can have enough engagement with the administration and the regulators themselves to participate in the conversation and not just be subjected to, hey, I read this book on AI at a brief yesterday, and now I'm in charge of this department's regulatory oversight of artificial intelligence, and you're thinking, oh great, here we go. So that's really all I end off on. I think we treated the viewers to a little bit of an AI regulatory rant today, Aaron, but hopefully it clarified some of this new direction.
Yeah, I think it did, and I think, as we our audience, like you said, is mostly investors, traders, etc. As new different regulations and rules and things are passed with AI, when it comes to that, we will come to you and explain it to you so that you guys understand exactly how it impacts you as retail investors, and exactly what you need to know when it comes to AI, so that you're not getting left behind and other people out there are using new AI tools that you're not using, or that there's this new rule that's passed that allows you or disallows you to do something. So, I mean, this is as pertinent for me, Ryan, as it is for any member of the audience, because it's just too big, this AI stuff, to get behind the eight ball on, and to not understand what's going on, and to not be up to date on what the government is doing about it, quite frankly.
Yeah, absolutely. I mean, it was a long time coming. I think the on ramp was, frankly, a little slow domestically. It was super fast overseas, and there'll be some back and forth. There always is with regulation, specifically financial regulation. There's always an ebb and flow that's largely tied to administration change, but also investor education. Like, the crypto investors at the end of that bubble were not the same investors at the beginning. You had a lot of astute, fairly knowledgeable investors in tokenized assets. Yeah, you had the FOMO people that jumped in at the last minute, but the education had been hard won, and I hope that occurs here. I hope people are taking the time to better understand how this technology can be useful and harmful, and then make your investments accordingly.
100%. Well, Ryan, thank you for hopping on with us on Benzinga Live today. We will continue our Kaiju and Benzinga educational series next week. Make sure to tune in. Ryan, remind me, what are we discussing next week?
I think actually you guys are away at your tech thing next week,
Oh,
where
that is right. So we'll be back
you've
in
been
2 weeks.
kind enough to nominate Dip for best new ETF launch.
Hey,
So
you got my vote, Ryan.
yeah, that's it. I mean, when we're sending Deepa, right? And she's our hit girl. So I know that Scott said he was going to be making a run for the exit if it didn't go our way. But
Well, there you go.
no, in all honesty, it's a pleasure to be nominated, and it'll be awesome to see you guys in New York City. And then the week after that, we are circling back here with trading platform setup. So I'm going to walk everybody through what that looks like on a professional system. So I'll just quickly show you what multi-screen Bloombergs look like, and then we'll walk through it on a retail accessible system, which has everything that you need to be successful with your trading.
Beautiful. Well, Ryan, please enjoy the rest of your day. Again, thank you so much for hopping on. Always a pleasure to get your insights into this AI industry, which, of course, I mean, got to know vastly more than I would say 99.99% of people when it comes to the AI industry. So to talk to anyone, it's great to have you on when it comes to talking about this AI executive order. I went through it, like I said, the fact sheet. Didn't really know what my big takeaways were. Now that we've had this discussion, I know how to feel about it. I know what to look out for on future regulation.
Well, I'm glad it was helpful. It's always nice to be here, Aaron.
Of course. All right, Ryan, take care. We'll chat. Good luck next week at the Benzinga Awards. And then in 2 weeks, we'll be back live. Make sure everyone tunes in here, 11 a.m. Eastern, as always. All right, guys, that was Ryan Pannell, the CEO of Kaiju. Going to go ahead and drop some links in for the DIP ETF if you want to go check out more of that, as well as Kaiju's other offerings. Just a really exciting company that's doing a lot when it comes to intersecting AI and finance, which, of course, will just continue to be a bigger part of the industry. AI will, when it comes to trading and finance over the next 5 years. So if you want to get yourself set up to where you can really understand how this developing technology is going to impact the stock market and going to impact financial markets for the rest of your life, then make sure to tune in every Tuesday at 11 a.m. Eastern when Ryan joins on, because we're getting really just invaluable information from him when it comes to this industry. And I mean, I can't thank Ryan enough because I don't even know. I mean, I understood like what Chat GPT was when it came out and stuff, but I've just learned so much, infinitely more about how AI is intersecting with finance since Ryan started coming on the show. So if today was your first time tuning in, make sure a couple weeks you'll be back, or Ryan will be back, and then you guys got to come back if you want to learn some more. Before we sign off on the day, which will be here in a few minutes, just because we've got some other stuff going on here at Benzinga, I just want to run through the market real quick. I might need to go back out of office because it seems like when I'm gone, the market does pretty well. I mean, the S&P 500 I think has gone up every single day the past like 8. Is that wrong? Let's check. I want to say the S&P 500 is just on like a huge win streak right now. Pull up my BZ Pro, baby. And again, pro.benzinga.com for your free 2-week trial. No credit card needed. No reason not to try it out. I mean, look at this V-shape recovery. I mean, this is beautiful. You had the S&P 500 or the SPY ETF at about 440 a couple weeks ago. Dropped all the way down to about a little bit below 410. Looks like the low there got around 409. And we've just come screaming back. I mean, the last week, the S&P 500 closed up more than 5%, was the best week of the year. And I think common knowledge for most people is to say, okay, the market just went up 5% in 5 days. It can't keep going up. I'm going to buy puts, or I'm not going to buy now. I'm going to wait for the dip. And then what does the market do? It keeps going up the next 2 days as well. And that's really, I think, one of the things that you learn pretty quickly as a trader or investor is that it's counterintuitive in a way because you don't want to buy high. You want to buy low and sell high. But sometimes when the market's up 5 days in a row, that really is the best time to buy, right? There's an established trend. There's a clear reason that people are feeling more bullish than they were a week ago. And we could talk about these different reasons. I mean, you had Bill Ackman come in and cover his short bond position because he said, look at how much uncertainty there is in the world with all this conflict in the Middle East. There's no way central banks are going to continue raising rates. You have that going on. Just the prospect of or the idea that that central banks around the world will be unable to continue to raise interest rates because of geopolitical uncertainty. And then you also have the fact that inflation is and is expected to continue falling. I mean, we talked about this with gas prices, and I told you guys that, look, if gas prices stay where they're at right now, $3.40 compared to a year ago, $3.80, that's a 40-cent difference. That's not nothing. That's about, a little bit less than 20%. So if gas prices has been one of the things that's been driving or has made it look like inflation has been sticky this year, then this drop in gas prices should equate to a big drop in CPI numbers. Of course, if inflation continues to fall, then that makes it more likely that the U.S. Federal Reserve is able to cut rates. I mean, look at this. This is true inflation rate. Year on year, 2.34%. The U.S. government reported rate is 3.7%. So truflation, and I'll drop that link in the chat too. Truflation's numbers show that U.S. inflation is actually lower than the government is reporting. So I think the markets are kind of taking a lot of these things into effect, of course, as well as strong earnings, strong economic data, like all this stuff, and people are just feeling more bullish than they were a couple weeks ago. In terms of retail sentiment honestly this was from last week, so I assume that after the 5 days in a row or 7 or 8 days in a row or whatever that SPY is going to close up, that this number, what you'll see, what direction do AAIA members feel the stock market will be in the next 6 months? I guarantee you this number of bullish, it's about 24% so less than a quarter of retail investors said they were bullish last week or the week ending in 11-1, sorry. Now this week, the week ending in 11-8, I guarantee you that number hops up to like over 40% because that's just how we are. We see the stock market going up and we say, okay, yeah, we're feeling better about it. But all right, guys, going to go ahead and wrap up for the day. Again, thank you to Ryan Pannell and the crew over at Kaiju. We'll be back on Thursday again next week. Make sure to tune in for a coverage of our events in New York. Hope to see y'all there. Till then, stay green.